The S&P 500, the Nasdaq 100. We got to talk about exactly where we're at and how we're moving. Now, what I will say, we're going to jump right into the bulk of this. You're pushing your local highs. If we zoom out here, this is a daily chart. You can see you look incredible, right? You clearly are making higher lows going back into October. You're pushing back into this range near 4,200. And if you break above 4,200, I do believe you are in the possibility or the realm of getting back into a bull market. And this is the craziest thing to say. I agree. I'm going to talk about the fundamentals, but we have to talk about what's happening here. Now, what will I say before we go any further, before you ask any questions? You're bearish below 4,100. You're extremely bullish above 4,200. You've been in this range for a little bit of time. Going into Nasdaq, NQ, right? The QQQ, tech primarily. We look here, our three levels. What have we said? 12.95, 13.1, 13.2. Now you're claiming 13.3, breaking out of this level. Zooming back out, look at where you're at. Look at how you're moving since October. Bottoming, pushing up. You look incredible, people. You look strong, right? This is your January lows from 2022, last year. You break above 13.7, we're in the same book. Tech looks promising. Tech looks incredible, right? These are the things we need to be watching. These are the big top signs we're watching. Now, today, we had some really big news regarding the bank crisis. We're going to talk about that. We had some really big news regarding inflation reports. We had to talk about that. And then going into next week, we have a big decision, and it will most likely lead to the pausing of rates, in my opinion, very soon. Now, before we get into that, I have to ask you to do two things. Consider liking and subscribing. Every single day I make videos for you here on the market, Monday through Friday. The podcast will start very soon on Sunday as well, so I hope everyone's ready and excited about that. Also, too, the newsletter, 100% free, down below. On the newsletter, we highlight everything, what's happening, what to expect. Last week's newsletter, primarily the futures. That's where everyone should really focus on and do whatever you want. Conversely, if the Nasdaq drops below 12.95, sellers can increasingly become assertive, pushing us towards market lower of 12.728 than 12.554. I want to give you a visual. What happened? This is last week, so you can go fact check this. It's on the website as well. Where was our low on the week? Where was our low, people? Let's really look here. What happened there? The exact level right there. 12,807, right? A little bit lower actually. 12,799. We were about 20 points off, give or take. This is all free information for you as well. It's all there. It's all for your cheat sheet, our favorite stocks, everything in between. Get on the newsletter. It's it cost us money to make it. We don't even advertise to you. Now, Discord, if you're interested, there are spots available now. Check it out. But again, I'm going to tell you one thing. Do not look to join any Discord, even mine, just for signals. If that's what you're looking for, I promise you, you will not find success. You're not going to follow someone and they're not going to make you rich, including myself. But what I will say, this is for people that are interested in getting serious with their trading, being around other traders. We have over 800 traders. We're getting really close to 900, so I'm really excited to say that. But we're right there, right? So you're around a bunch of like-minded individuals that are going the same place on the same journey. Now, that being said, some of the trades that were taken today, we did good, right? We did good. Now, if we look at some of the trades that we were looking at, I'm going to show you the losers and the winners. Today, I did get into Meta puts under the April 5th high. I got stopped out of those pretty quick once the news that ChatGPT is looking to integrate with Facebook. That was extremely bullish. Once I came out, I was like, get me the hell out. After that, you saw NVIDIA. You had an ascending triangle form. You bounced right off the top, 275. You came up, you came back down touch, and you pushed up towards 277, 278. Those contracts went up around 30% by the end of the day, as well as there. So again, making sure your winners outweigh your losers, risk management, everything in between, right? And then other people taking all the other trades and the other trades mentioned in our live voice with over 100 people in there, usually every single day at market open. So make sure you check that out if you're interested. Now, looking today, looking at the action. Now, basically coming into this week, what were we looking at? We look at the Nasdaq and you can see you were in this downward channel, essentially since April 18th, pushing down, lower highs, lower lows on smaller time frames, okay? We bottom out at the level, get back about 12.95. Now, again, what do we know? If we look at the market, 12.95, that's the level to be bearish on the Nasdaq. On ES, below 4,100, that's the level to be bearish, right? Again, What did we look at there this week, right? Remember, we went over those. I showed you everything that we were looking at. I showed you how we traded it, everything in between. People saying, well, Tyler, you were really bearish. I was. But every single day, what did I say? You have to close those positions because overnight, it's killing you. You have no follow through. So what did we do? This was on, I believe, this is 26 or whatever day that was. $3,200 made there. The day before that, the 25th, shorting Qs, $1,600 made there. Just picking and choosing, getting what we're getting, right? If I miss it overnight, I don't care, right? Right now, the market is not to the place, like I've been saying, to where you hold things overnight because you're not in a clear trend. Now, what I will say, you are in a trend towards the upside. We've been in that since October, but we need to understand that you're not getting the follow through on shorter term trades. So for me, there's no reason to be holding too many positions overnight. So we push back up, we reclaim 4,100, and the rest is ultimately history from there. We push right back up to almost 4,200 today. Incredibly bullish. Again, as you zoom out, this is where you're ending the week. Now, this week specifically, we have a lot going on. Let's start with the bad though first. So today, we haven't had it announced yet, but FRC, this was announced this morning around 8 a.m., is most likely leaning towards FDIC receivership. Basically, they're going to get taken by the government, okay? Because they don't have the money, no one's going to buy them out, no one's going to help them. It's worth mentioning they were already tried to rescue for $30 billion, so why would anyone put any more money into them? It makes no sense. Also, too, the Fed did release a report. You can Google it for yourself. I didn't want to pull it up today. Maybe I'll make a video on it, but I'm not going to do that right now. The Fed went over everything regarding what happened with this bank crisis. And the biggest thing to take away from it is it wasn't from the Fed. And I agree. The reason these banks fell is not because of rates rising. The underlying problem was that these banks made bad decisions, bad investments. I wanted to pull this up really quick. I said I wasn't going to, but here it is. At the time of its failure, SVB had 31 unaddressed safe and soundness supervisory warnings. Imagine a world where this happens. Congratulations, we live in it. 31 warnings that they were overextended, terrible investments, etc. They were betting on long-term bonds in the US market, making $0 at all-time highs. The stupidest investment you could have made. A kid on the internet, on YouTube, could have predicted that the market was going to reach turmoil and crash. These guys are professionals. Imagine, this is completely unacceptable. So to blame this on the banks for doing, or to blame it on the Fed for raising rates is stupidity. Absolutely ridiculous. They were warned time and time and time again. Now, some of the decent news. Number one, PCE. And I know as we look at PCE, you're going to say, Tyler, it wasn't that good. And I agree, the PCE wasn't that good. So core PCE, as we look at this, is down. Okay, this is not core, this is regular. Regular PCE was down. 4.2 here, 0.1 here. Core, right? This is what the Fed keeps talking about. Core. Core is what matters. Sideways. Nothing happened. Nothing happened. Now, for the people saying, well, Tyler, don't you think a pause is going to happen soon? I think we get one more rate hike this coming week because we have the Fed meeting this week on Wednesday. I think we're going to get one more hike, and I think we're going to pause. This is my statement regarding you. And hear me out. We have risen. Scratch that. The unemployment rate continues to drop. It does not rise. It is not rising whatsoever. Consumers are making more money consistently over and over. As you can see, personal income continues to rise. This is something we keep looking. It's not decreasing. It's not even stalling. So people are making more. They're retaining jobs. They're getting jobs. Well, the Fed has raised rates from 0 to over 5% now. So would logic tell you if they raise rates again that you would start seeing unemployment rise? They've already done it so many times. So the answer to that is clearly no. Them raising rates would not force people to get fired. It would not be what would happen. Okay, what's going to have to happen is these companies are going to have to start bleeding. They're going to have to start getting hit. And so when you look at this, the Fed wants to get to the point where they can pause and just leave rates where they're at. And then you'll see the markets go through an area most likely of some stagflation, which we're kind of going through right now, to where we just stall on growth, GDP flatlines, which it is doing right now. And then the market will slowly start hurting. That's what's probably going to happen. And it's going to be a long drawn out effect. but the Fed has no reason to keep raising rates. Now, if inflation starts to persist and rise again, which most likely will happen only if energy starts to go up again as far as oil prices and crude, which we'll talk about that later, then they start raising rates again. So they don't want to go over, they don't want to overextend on rates and then sit there and then have to go even higher. They don't want to go to 8% on rates. That doesn't make any sense. So they want to slowly get to 5.5, 5.75 maybe, stop, and then have more room to 6.5 if they have to, right? They're not going to go to 7, 8% interest because then no one would buy a house. You couldn't. So when we look at the market, that's where we're at. And for people saying the house market's going to crash, no, it's not. I'm sorry, but it's not. And so that's what we're looking at there. Now, the good news, pausing, rate pause. Everyone's been talking about this. Everyone's saying, well, Tyler, the market, it's still doing great, Tyler. They shouldn't pause. What has the Fed said time and time again about pausing rates? They continue to say the same story. They are not going to pause rates because banks are hurting, because consumers need them to. That's not why they're going to do it. They're only going to pause rates if the market absolutely needs it. So if people were actually just losing their jobs and the market was free falling and we were going into an economic crisis, then yes, they would. But that's not happening. We're slowly rising. That's not why they have to do it. But they're also not going to keep raising rates while the market's doing well. The stock market and necessarily the economy, the aspect of inflation is totally different. You have to understand that as well. So when we look at this, the market's already dropped. It's dropped pretty crazy. Okay, so we have to understand where we're at. Is it possible, though, for people, and you have to kind of try to conceptualize this, is it possible that we continue to rise while maybe consumers get hurt? And I think this earnings painted a very interesting picture for most investors. Because even though all speculation leads us to a recession by the end of the year, that's what every big bank is saying now, what did earnings do for the first time in a year? Every tech name beat. Every single one. This has not happened since 2021. We have not seen these earnings like this before, where every single name smashes. And I'm telling you right now, if earnings did not come out the way they did this week, you would not be getting this reaction. I said at the beginning of this week, I was almost 99% sure we'd get out of this range. And I'm not going to lie, we got out of the range for one day, we got back into the range, and then we broke out to the other side of the range within 2 days. So we did, we were right to a certain extent, but it just took us a little bit longer than expected. So that's where we're at. So in my opinion, going into this week, if earnings stay on this track where AMD and Apple, do decent, right? Going into the end of the next week, and we decide to do a 0.25 with the tone that a pause is coming, I believe personally you break above 4,200. Now, am I betting on that right now? No. I'm telling you the same thing I continue to tell you day in and day out. I am not looking to play the long-term game just yet. Now, I did start buying Tesla yesterday. I said if Amazon, I put this in Discord. I told everyone in Discord, so it's all there so everyone can see it, right? I let everyone know. Going all the way back, go to Tyler's Zone real quick, scroll down. As you can see, I said if Amazon beats earnings, I'll be buying Tesla common stock. The daily candle is incredible. It was a bullish engulfing. So far on Tesla, we'll post here in the after hours. I did forget to post, so I'm sorry. So I'm probably not going to keep track of this or count this as a win or anything in the channel, but I did post that. I got busy with my son and just couldn't do it. But Tesla's the only name I'm really going to play just because of value and owning stock in it. But right now, again, that's my opinion. If you start to get these things happening in the right direction, that's the trajectory. Now let's take a really quick look at what's happening here on Cheddar Flow with some of these options as well. We look at SPY. We'll say you saw some puts coming in. But again, as we look here, they're going for June, 616. The May one, pretty aggressive call. Not going to lie to you. $400 call, 1.6 million. There wasn't any crazy huge orders. There's someone probably selling puts here at 465, very deep in the money. So they're probably selling those. But as well as looking at what's happening here, right? So you have to be happy with the way that you're moving here. You look really good. Some hedges probably for 395 for puts, but overall you still look great. Going into Qs, again, nothing crazy at all. I think you're getting a little bit of a hedge here at the beginning of the day, but most of your sell side came in the beginning of the day. As the day progressed, none of the other ones came in. IWM, interesting as well here. I want to talk about IWM here in a second. Going to VIX, mixed, not the most incredible. Going into something like IWM, I think today was very interesting when we look at what happened here. The flow has been inherently some of the worst flow that we've seen on IWM. It's been very bearish. But one thing we can see from this now is the strength of this level. We're holding it, 170, you're bouncing once again. IWM, the level you're watching as you get above is 178. If you hold above 178, I think you're incredibly bullish, and you'll start to see love in the markets, and you'll probably push towards 185. That's the big level to be watching there on IWM. This is probably the last area of the market to really point us in a risk on, risk off area. Okay. A few more things we're going to look at here. Bonds. A lot of questions asked here. Again, you can see kind of like a flag to the downside on every single bond we look at, right? Nothing really telling here. So I don't want to get too worked up there. Gold. I also want to mention gold. Everyone here is talking about gold. Tyler, do we buy? It's the best thing that there is right now. I'm going to tell you right now, gold, you are at your high right now. This is your all-time high right there. You're at a major resistance. It is not the time to be buying gold, in my opinion. It's the riskiest time to be buying gold here at these highs. I'm not going to tell people to go short on gold, but I think it's stupidity to be going long on gold. If you look at the Google, I made a short on this as well. If you look at the Google trend for the gold, how to buy gold on the Google trend searches, it's at the all-time high going back to, I believe, 07. Okay. If you look back at some of these trends that have happened, no, it was back in 11, actually, 2010, 2011. When that happened, you got brutally hit, right? You're in this area of FOMO, right? On when it comes to gold. I'm not saying gold's bad. It's a really good risk-off management tool. But I'm going to tell you here, you're in an area to where things are pointing that everyone's siding with this downside thesis. And if you get below the key levels of 4,100, 1295, I'm bearish with you. But until that happens, there's no reason to assume. There's no reason to think that. And so people that are going super heavy into gold, lower risk name or lower risk play, but I'm just telling you, everyone's doing it. Do you want to be on the side of all of social media and everyone else? Another look here. Looking at NQ. Actually, we'll come back into TrendSpider. The long-term view here. We go to something like the weekly. You get clear answers here. Look at the movement. It incredibly bullish weekly and monthly candle here. Going to the monthly. This is the monthly candle you just had. A hammer candle. The monthly here, we're done. No more. Monday's the 1st. It's a new month. Incredible candle. Last time we had even close to a hammer candle was back here in March of 2021. The next month we ended up going from 13, we're kind of where we're at now, into 14,000. So I'm not saying we have to do that, but I'm saying things are lining up in a very specific order that look very good for the markets. Now, I want to run you through one more scenario. And maybe this is a little bit conspiracy theorist, okay? Joe Biden just announced his presidency bid, his run. Going into the final year of his term, do you think it might be a beneficial thing that the markets have a decent year? Do you think it might be a beneficial thing for the Democrats to try to make it their sole goal to get the market absolutely out of the gutter? Which, if you remember, for the first basically year of his term, he tried to paint this narrative that, oh, we're great for the economy, we're doing this, we're doing that. He was screaming from the rooftops. But he hasn't really said that over the past year and a half. Who would? He needs some strength. He needs something. I'm not saying that they're going to prop up the market. But what I am going to tell you is that right now is a very interesting time as we go into next year. I don't like to mention all this stuff, but this is something you need to be looking out for and you need to be watching. This is what I'm looking at. This is what I'm looking for. If you have questions, comment down below. More will be coming out very soon. I'll see you again on Monday.